Capital gains tax-free precious metals. Some of you have them, and depending on your residency, should be taking full advantage of this. Stuart O'Reilly from the Royal Mint explains this to us on this episode of Silver Bullion Television. Hello again, everyone, and welcome to another edition of Silver Bullion Television, SBTV. I'm your host, Patrick Vieira, part of the outreach team of Silver Bullion here in Singapore, where we want to help you truly secure your wealth. Stuart O'Reilly, market insight analyst from the Royal Mint, joins us today. As many of you know, the Royal Mint is at the forefront of innovation in bullion and precious metals investment products. And Stuart will share from a Mint's perspective his takes on gold, silver, and platinum. And we're delighted to have Stuart join us today. It's time to saddle up and silver up for Stuart O'Reilly. Stuart, welcome to SBTV. How are you doing?
I'm great, thank you. How are you?
I'm doing fine. Glad I have a chance to chat with you. Can you tell us about the history of the Royal Mint? Because I understand there's a pretty amazing history that's truly deep and fascinating.
There is, yeah. I studied history at university, so it's a bit of a passion of mine. And to work for an organisation like the Royal Mint is amazing if you're into history. We have a history that spans back 1,100 years. We're one of the UK's oldest companies, and in fact, we're one of the oldest companies anywhere in the world. We date our history back to the Viking invasion of Britain. So if you can imagine at the time, there were lots of kingdoms across the island of Great Britain. The Vikings came over, conquered large swathes of Britain, and terrified the population. And then it was thanks to the wisdom, really, of one of the kings, King Alfred, who we still call Alfred the Great today, that he managed to push back the Vikings, kick them out of London, and retake London for the Anglo-Saxons. And as part of those reforms that Alfred made that helped him push those Vikings back, he set up the Royal Mint, a single mint in London for the first time. And we minted a coin that had the word Londinium written on it, which is the old term for London. And that coin was minted in the year 886. And that's really when we trace our history back to then. And we've been continually operating for all of that 1,100 years. And for that entire period, working with precious metals. So that first coin that we struck, that I just talked about, was a silver penny. So we've been working with silver for 1,100 years. Gold came a little bit later, but a very long history working with gold since the 1300s. And then obviously now today, gold, silver, and platinum.
Yeah, hey, that's a pretty interesting story because if I could ask, why silver first before gold?
I think it was just more accessible at the time, much more easily to kind of put into circulation. The first kind of gold coins that the Royal Mint experimented with, some of them weren't a huge success actually because the gold value of the coins was worth more than the coin itself was. So people were just melting them down and using the bullion as trade really. So we had a few kind of false starts with gold until we really started putting gold coins into circulation. But it's about getting coins into people's hands as well. So if you think about Alfred pushing the Vikings out of London, he really wanted to celebrate that, and he needed to get that message out to people that he is the king, that he's done this great thing. And so silver is a much more accessible metal to get into people's hands and into everyday trade. But that's kind of spanned all of the history of all the mints, really. Propaganda, I guess, is a big part of it. And the first kind of gold sovereigns that we struck, so we still strike gold sovereigns today, but they've got a 500-year history. And the first gold sovereigns were about establishing a new royal family on the throne, the Tudors. So those coins had the Tudor rose, which is the emblem of that family. It had Henry VII sat on a throne, looking like he was meant to be there. But really, it was about international diplomacy. So he wanted to compete with the gold coins that were coming out of the Spanish and the Dutch empires at the time. And he wanted to get these coins into the hands of those royal courts. So merchants were trading in gold coins, and it was a way of showing the kind of prestige of Britain, but also the legitimacy of a new reign.
Right. I got asked this question now with the sovereigns. I believe it's King George on a horse slaying a dragon.
Yes, St. George, yes.
Saint George, Saint George. Okay, yeah, I think that design is it's pretty awesome there. I wasn't sure if it was a saint or a king, so I thought I would start with a little bit lower level with the king to see how high it would go. But interesting. And Sir Isaac Newton also has some history with you.
Yeah, absolutely. Isaac Newton was the master of the mint at one time, so in charge of our production. And if you think about some of his achievements, obviously the I was going to say discovery of gravity. I guess he didn't discover it, but he kind of formalized the theory. But also a lot to do with the theory of light and how light moves and what light is and how it's made up. And we actually use a lot of that today as well. So we have a jewelry business called 886, which is the year that the mint was founded. And they've used some of Isaac Newton's theories about light to make some incredible pieces of jewelry where the light hits a cufflink or a necklace or a bracelet, bounces back off and creates a pattern or a symbol that you can see. A bit like a bat signal, if you like, is what it looks like when the light bounces back. And that's all inspired by Isaac Newton.
Okay, was that part of the inspiration for the security feature on the Britannia coins?
Absolutely, it's the same team of people who came up with those security features that are involved in the jewelry business today. So a few years ago, the World Gold Council did a study, and they wanted to understand what was stopping people from buying gold. And they conducted the same study in 8 different countries, I think it was, in China, in Germany, in Thailand, in the USA. So lots of different kind of markets that behave differently. And they came across 2 major barriers to people buying precious metals. The first one was education. So people just didn't know, what moves the gold price? How do I buy gold? All that kind of stuff. And on that front, we've been doing a lot of work. I know you've been doing a lot of work to kind of educate people and to make sure there's enough information out there for people to make an investment decision. And the other major barrier was actually trust. So how do I know that this piece of gold is genuine, that it's not either a counterfeit product because it's not gold, or it's a counterfeit product because somebody else has made it and maybe there's a slightly dodgy supply chain or something. So we sat down almost with a blank piece of paper to create these security features. And again, those are actually inspired by the Royal Mint's really long history. So if we talk briefly about these features, on the coin, Britannia holds a shield. And on that shield is the Union flag, obviously the British flag. And we added what's called tincture lines to that shield. So they are lines vertically for red, I think, and horizontally for blue. And that's a tradition of conveying colour that has really long roots in the 12th and 13th centuries in Europe. When ink, for example, wasn't, or paint of different colours wasn't readily available, you'd use these lines to symbolise a colour. So that's what those lines are on her shield. It symbolises the red, blue and white of the Union flag. We also added a latent image. So there's a mark on the coin where if you move it one way, you'll see a padlock for security. And if you move it the other way, you'll see Britannia's trident. And we were one of the pioneers, really, of latent images, or lenticular images, some people call it. And we used them on a circulating £1 coin in the UK. So all of our circulating coins have this feature, and we decided to roll it out to gold coins. It's got surface animation in the background of Britannia. So again, using Isaac Newton's theories about light, we've created this pattern behind Britannia that as you move it in the light, looks like the waves behind Britannia are rolling, which is incredible. I've not seen that really on any other coin or bar products outside of the Royal Mint. And then the final feature is microtext. So very, very small text that runs around the border of the Britannia. And that text reads Decus et tutamum. And that translates from Latin as an ornament and a safeguard. And that is actually the text that was one of the original Royal Mint security features. So back in the 1660s, people were removing gold, clipping the edges of gold coins. If you imagine you had a gold coin, you took a millimeter, for example, from around the edge, as long as it was still round, people probably wouldn't notice that there was a bit of gold missing. But if you did that enough times, you'd have a fair amount that you could sell on just as bullion. So in the 1660s, we put this lettering around the edge of coins to stop people clipping it, and that said Decaset Tutement. So we've used that history and brought that into the products today. And obviously, when you're an organisation with 1,100 years of history behind you, there's a huge amount of history to kind of go at. But we tend to have our best performing products when we use that history to inspire what it is we're doing today and use it in a modern context.
Yeah, one thing with the your products, I'll just use the Britannia coin as an example. It's really a coin that comes to life, and in comparison to other coins out there, especially from sovereign mints, it's in a league of its own, and I'm always thrilled to be able to play with it in that light, and as you said, get a different look from it. Um, okay, I could stay on these topics all day, but I'll move forward a bit. Stuart, your view on demand. What is your view as far as driving the demand, especially with silver, where it was not that long ago where we saw silver, that silver to gold ratio up over 100, and now we're down in the 80s, almost the mid 80s.
Yeah, I mean, the last few months, probably since the start of the year, have just been incredible for all three metals, actually, gold, silver, and platinum. And the gold-silver ratio is definitely something that our customers have been talking to us about. And what we saw was this incredible gold rally that started, not even this year, back last year. And some of that was driven by central bank buying. So central banks are buying huge amounts of gold. They say they're buying it for all the same reason that retail customers are buying it, but it seems to be part of a broader story of de-dollarization. So central banks reducing their reliance on the US dollar and buying other assets. And whereas traditionally they might have bought things like euros or British pounds or Swiss francs, they are now buying other currencies like Canadian dollars, South Korean won, and increasingly they're buying gold. And if you combine that central bank buying with the geopolitical uncertainty that we've had over the past 18, 24 months, that's really led to a really strong rally in gold, both from retail investors in bars and coins, and actually we've seen some fairly strong jewelry sales as well. And then I think what's happened is people have probably looked at that gold rally and saw that it grew 25, 26% last year, and it's up almost 30% this calendar year alone. And they've looked to history and seen that traditionally when gold rises, silver is often not far behind it, and platinum too, and actually jumped into those metals as a way of kind of getting in on that price momentum. So silver's up 32% this year in dollars. And we've certainly seen a huge surge in silver sales in the UK. So we have a product on our website for UK customers called DigiSilver. So it's a way of investing in the large silver bars. And the sales of that product are up 1,158% versus the same quarter last year. So huge increase. But it's not just silver. I mean, platinum's probably the big topic at the moment as well. Platinum is up 61%, I think it is, this calendar year. It's a huge rise in platinum. And we've seen similar kind of sales. If we look at our digital platinum product, that's up 798% year on year. But I think that started to cause problems actually in the market. It's interesting. We had an issue, didn't we, a while ago with tariffs and uncertainty around tariffs in the US. And what was happening was lots of central banks, lots of ETFs, lots of large swathes of the institutional market store their gold in London vaults. But suddenly, when there was a threat of tariffs, people wanted that gold in America because they wanted to avoid being hit by any potential tariffs. So we saw a huge flood of gold out of London and into New York vaults, and that created huge logistical challenges because if you imagine the weight of 400-ounce gold bars, they weigh almost 12.5 kilos, and they're worth well over $1 million a piece. So to move that amount of gold is really difficult, actually. You've got to insure it. You've got to put it on passenger flights, for example. So it takes a long time. And we started to see a bit of a spread emerge between the COMEX market in New York, which was where the demand ultimately was, and the price in London, because people, as I said, wanted that gold in New York. And the same was true to some extent of silver and platinum. That's now died down, but what we've seen is this huge surge in demand for platinum, particularly into places like China, and lots of mints and manufacturers and refiners who rely on platinum actually lease their metals. They don't buy it; they'll lease it from the bank, and they'll make a trade later on down the line. And the lease rates have absolutely skyrocketed over the last few days, and that means that potentially the supply of platinum into the market might be hit. Just because mints and refineries don't necessarily want to be paying those huge leasing rates, or they might have to put up prices at the other end as well, just to make sure they cover those costs.
Yeah, those are all great points because I hear a few guys saying these are the highest lease rates that they've ever seen for platinum, and then I also hear trying to get physical platinum is it can be a bit testy at times. So I wanted to ask from your position, how is the supply of platinum or the demand for platinum, and what do you think is causing this demand for platinum?
A lot of it is switching out of gold jewelry into platinum. So if you think about markets like China, where they buy jewelry, a lot of it's bought on weight rather than there's no like fixed retail price, for example, and they'll buy it by weight. And as the gold price has been increasing, what we've been seeing over the last decade or so is consumers increasingly looking to lighter weight product because it's cheaper to purchase. And as we've seen that shift, we've also seen a shift away from platinum and into other metals for jewelry, so silver. But silver probably doesn't have the prestige in terms of a jewelry metal that platinum has. And so we're seeing lots of switching, it seems, out of gold jewelry and into platinum jewelry. And that's certainly a trend in China, but we're seeing, for example, in India, lots of celebrities, cricketers, for example, who are buying lots of platinum jewelry, and they're very kind of open about pushing that on Instagram and all these kind of other places where people are seeing them. So platinum seems to be back in vogue, I think, as a jewelry metal. And that's probably where a lot of that demand is coming from.
Yeah. You mentioned China, you mentioned India. Stuart, do you see any type of, let's say, buying trends between the Western and the Asian countries for let's say the Britannia coin, for instance?
Yeah. So the way the markets have traditionally operated and the way that they seem to be operating at the moment, it draws quite an interesting distinction, I think. So if we'd have had this conversation even 12 months ago, I would have said that traditionally the way the market has worked is that Western markets, UK, USA, Canada, even Australia, will tend to buy precious metals when the price is rising. So they want to jump on the momentum. They're buying when there's political uncertainty or when they're worried about the rest of their investment portfolio. And then the kind of counter side to that is parts of Asia are buying more kind of routinely, more regularly, and also more price sensitively. So they're buying when the price looks good rather than, I need to buy now because my portfolio is tanking. And they're buying much more consistently. But what's changed, I think, in the last few months is that Western investors seem to be a little bit more aware, I think, of what's moving precious metals and how to kind of play the wider market. So we had 3 consecutive records on our website for gold coin sales. And in the last quarter, that's kind of dipped off a little bit. But what we've seen is huge inflows into silver and platinum. And I think it's because the gold price has rallied. Investors have thought, right, have I missed it? Am I too late? Maybe if I jump into silver and platinum, they'll rise too. And partly as a bit of a sort of self-fulfilling prophecy, and partly for really good, strong, fundamental market reasons, that bet, if you like, has really paid off.
Here in Asia, yeah, I'd say typically we people just buy, and if they're Western or European, I can safely say it's maybe news sensitive with,
Yeah.
their buying patterns. So that's a great point there. But I also wanted to ask you, especially in the UK, um, the Royal Mint products such as the Britannia coins, I understand that they are capital gains tax free in England, or is this the whole UK?
In the whole of the UK, yeah. So obviously, capital gains tax is the tax that you would pay on profits when you come to sell. And if you were to buy bars in the UK, for example, you would have to pay taxes when you come to sell if you've made a profit. And what's happened over the last few years is that the threshold at which you start to pay capital gains tax has come down. So it wasn't that long ago, 3 or 4 years ago, that threshold was £12,300. So if you made less than £12,300 in a year, you wouldn't have to pay capital gains tax. That's now come down to £3,000. So any profits over £3,000 for everything you sell over the course of the year, you would have to pay capital gains tax. And also the rate of capital gains tax has increased. So the threshold has come down and the rate has increased. So lots of investors are looking for investments that are capital gains tax exempt. And coins are capital gains tax exempt, UK coins, because they are legal tender in the UK. And the way that the law is written is that pound sterling is the unit of account. It is how you count your profit, and therefore it itself can't be you can't pay capital gains tax on it. So they're exempt from capital gains tax, and that's definitely driven a huge amount of investment into coins in the UK. I mentioned earlier we had 3 consecutive record quarters for coin sales, and then the quarter just gone was our second best ever quarter. So over the course of the past 4 quarters, we've never seen anything like it.
So, Stuart, just to be a bit clear here, the capital gains tax free, these are for gold, silver, and platinum coins.
That's right. Anything that's a UK coin, that's UK legal tender, is capital gains tax exempt in the UK. Yeah.
But there's also a VAT, a value added tax. So this is a bit of a different scenario for silver and platinum compared to gold.
That's right. Yeah. So value added tax, or sales tax, essentially general sales tax, is 20% in the UK, and across lots of Europe, it's ranges around about 25%. And across most of Europe, anyone who's in the EU or formerly a member of the European Union, like Britain, gold is exempt from sales tax in certain forms. So any of the bars that we sell, any of the coins we sell, if it's investment gold, it will be exempt from VAT, value-added tax. But silver and platinum aren't, because they're predominantly industrial metals. But we do have a product, or a series of products that are VAT exempt, which is DigiSilver and DigiPlatinum. Obviously, it sounds like it's digital and maybe it's not there, but the silver and platinum bars that back those products sit in our vault. The difference is you can't take delivery of it, and instead of owning a whole bar, and if you think about the industrial size bars for silver, they're 1,000 ounces, so over kind of 30 kilos. So it's a lot of metal to take delivery of. So it has to stay in our vault, and you own fractions of those products, and that is VAT exempt. And that's, again, alongside the capital gains tax changes that have driven huge amount of sales of gold coins and silver and platinum coins in the UK. The removal of value-added tax from our digi products has caused those products to absolutely skyrocket. As I mentioned earlier, if we compare last quarter with the same quarter in 2024, sales of DigiSilver are up 1,158%. So a huge increase in demand.
Yeah, with the silver, I hear outside of the UK and in with some other parts of Europe, There's also a VAT on silver, but none on gold. So I have to wonder, do you think this in some way stops investors from going into silver?
Yeah, I think it definitely does. And there was a situation a few years ago in Europe where um, a large part of the European market for silver coins was in Germany. It's a huge gold market too, but that's where a lot of the silver and platinum coins are also going. And the German finance ministry clarified some of their rules around value added tax on coins. And essentially, whereas previously the tax was only being applied at like 7% and to to margin of the product rather than the whole value of the product, they decided that the value added tax applied to the full sales value of that coin. And what that did is it almost killed that market staying dead. The demand in Europe for silver and platinum coins really dropped off. And that's been for a good 12, 18 months that the demand has been fairly depressed in Europe for silver and platinum coins. We have started to see in the last 2 quarters some encouraging signs that it is starting to pick back up, that maybe that had bottomed out and demand is coming back. But it may not be demand from places like Germany, for example, which would be the traditional market. Because the countries that we're starting to see now buying huge amounts of precious metals in Europe are the countries that are probably most concerned about events in Russia and Ukraine. So if you think of countries outside the Eurozone, so they operate their own currency and are in Central or Eastern Europe, and we're talking Poland, we're talking Hungary, the Czech Republic, those are countries that seem to be buying a lot more precious metals now than they were previously. And that's probably as a safe haven, both against fluctuations in their currency, because when Russia invaded Ukraine, all of those currencies took a big hit. So precious metals would preserve the kind of purchasing power, if you like. And also because who knows what will happen in that region of the world, and so people are buying as a bit of an asset of last resort, really, I suppose.
Yeah, when that I recall when the whole Russia Ukraine thing started, in the very beginnings of the conflict, there were people moving into 1,000 ounce bars of silver. They were really trying to move into a safe haven. Was it like that as well within the UK?
Yeah, definitely. I think globally there was those events, and any geopolitical uncertainty caused a bit of a surge in demand. But if we look back on that now, at the time it was really significant in terms of the increase in demand. But really, the last few quarters have kind of blown that demand out of the water. It's a huge surge in demand because there is still that uncertainty, because I think people are starting to worry actually now about government debt and deficits is much more what our customers are telling us about now than any geopolitical concerns, although that uncertainty still remains.
And I think it was just maybe a couple years back, there was a little bit of headwinds, I believe, with the gilt. Has that settled a bit, the government bonds?
Yes, yeah. So there was a surge, obviously, in the rate that you receive on UK government bonds, on gilts. There is still concern, though, and not just in the UK, in the US and lots of other markets around the world, about the level of government debt. The bill that was just passed through Congress in the US, the one big beautiful bill, as Donald Trump has called it, will, according to Congress's own estimations, will add huge amounts to US government debt. And I think people are wondering, what does that look like? Where does that lead us in the future? Where are we in 10, 20 years' time? And that plays into that broader trend of de-dollarization, I think, by central banks. And the dollar, the percentage of global reserves that the dollar accounts for is decreasing, and has been for a while now. And it used to be that euros were the second biggest asset, if you like, held by central banks. And that's now been overtaken by gold. So it's dollars, gold, then euros in terms of assets held by central banks. And I think it's because gold is seen as that safe haven asset. It's seen as that neutral asset that that people can go into, because if they're worried about sanctions, not necessarily themselves, but on countries they may want to trade with, or if they're worried about the US dollar and the value of that going forward and the ability of governments to pay their debt, well, gold is kind of immune from that. It's not controlled by a bank board like the Federal Reserve or the US government. It sits outside of all that, so it's a bit of a neutral asset.
Yeah, you know what I find interesting is, yes, it is. It's not a secret. The world is de-dollarizing, trying to get off of dollars, and then, as you mentioned, the central banks, um, they're having more gold in reserves relative to the euro. So I find it interesting that you have the world trying to get away from the dollar, and then also central banks who are moving gold up above euro. It's just a matter of time before we may see gold creeping up on that dollar as well.
I guess it's how you value the dollar, isn't it? And if you look at the traditional value of the dollar against everything else, the kind of Dixie index, the dollar is down almost 10% this year, since January alone, and gold is up. Was it 29%, something like that this year? So gold is not just preserving that purchasing power. It's not just preserving wealth. Actually, it is delivering returns as well, over and above whatever's happening with inflation or with currency devaluations. Gold is kind of outperforming. And equally, traditionally, people would put money in the stock market, and they still do. But gold is acting as that diversifier, and it's outperforming most asset classes. The S&P 500 is up 7.5%. The Dow Jones is up 4.5% this year. Said gold is up about 29-30%. If you were to diversify into platinum, if you bought platinum, the very very beginning of the year, you'd be up about 61%. So a huge outperformance of some of those traditional assets, and that's the role of precious metals in a portfolio. It's to diversify and to help you weather some of those uncertainties, some of the market shocks that we might not see coming, and ultimately also to deliver returns, because that matters too.
Right, absolutely agree. So, Stuart, tell me something. Let's say I'm a UK resident and I'm looking to buy some coins. Let's just say, particularly silver. And again, I'm a UK resident. Why would I buy any other coin aside from the Britannia with the tax treatments?
Any of the coins that the Royal Mint produces, so anything that's UK legal tender, will be capital gains tax exempt. So that includes Britannia, but it also includes things like the Royal Tudor Beasts range, the Queen's Beast range, which I know were hugely popular in Asia and in Singapore as well. Anything that we produce that is a UK coin is capital gains tax exempt. So you could buy any of those products, I guess, and still get the same tax treatment. If you were to buy a Canadian maple or a US eagle, great to look at, adds a bit of diversity to the stack, but you wouldn't get that same tax advantage.
I think those Queen's Beast coin, the first one was a lion that came out, and I think here in Asia, people weren't they were kind of iffy on it. They weren't sure about it, and once that series got rolling, you'd see a lot of people trying to come back and get that first lion coin, and a lot of guys are out there with an incomplete set. I'm one of them. But
I don't know if you've seen the prices now. If you look on eBay or anywhere like that, for the prices of that lion coin from 2016,
yeah, are they about what, triple now? Maybe I'm only guessing.
yeah.
Oh boy. A few years back, I came across a post on Twitter or X where a claim was made that the Royal Mint was out of silver. And I went and checked on this, and the bars were tight, definitely tight, but there was still a great stock of coins there. And I had called that person to tell them, hey, you might want to change what you posted out there, because they're not out of silver. They have a lot of coins. But I'm curious, from your perspective with the marketing with the Royal Mint and the insights you have, what goes through your mind when you see all of these sensationalist reportings going on in social media?
Yeah, I think it's annoying. I think there are lots of people out there who want to hype precious metals and say, silver's going to the moon and all this kind of stuff. If you're into that, fine. But the majority of people who are buying precious metals are buying it for kind of really logical and long-term reasons of portfolio diversification, of wealth preservation, of tax efficiency. They're not necessarily buying it because they think they're going to buy, one silver coin today, sell it tomorrow, and buy a Ferrari with the profits. It's not really how it works in precious metals. They have delivered some incredible returns over the last couple of years. And silver last year was up 22%. It's up 32% this year, I think, in dollars so far. So that's it's pretty impressive. I would always be a bit skeptical about anybody who's telling you that it's going to skyrocket. Or there was a silver squeeze, wasn't there? I think a while ago, if you remember, where there was a lot of activity around GameStop on Robinhood, and lots of people on Reddit were trying to kind of squeeze that stock, and the price did surge of that. The difference, I think, with silver, and the same is true of gold and platinum, is that there is an awful lot of it that sits in those vaults in London. So it can come to market at the right price, of course. It can come to market. Where you tend to get tightness in the market, and it's what we're seeing, I think, at the moment with platinum, it's less about the system breaking, for example, because actually the platinum's not there. It's more about the logistics of getting that platinum in the form that you want it, or that silver in the form that you want it. So yeah, I remember those reports of people saying that the Royal Mint was out of silver, and I think that there were times when we were out of silver bars because we just couldn't, we didn't anticipate that sudden surge in demand. And obviously then it takes time to produce new silver bars. And that's what that out of stock period was. And we see that from time to time on lots of things as well. Sometimes we go out of stock of gold Britannias, for example, because you see a huge surge in demand in one part of the world, and therefore we have to satisfy that demand and then go away and make some more. And that takes some time. Of course, with platinum, actually, at the moment, I should say, there is a tightness in the market. There is also forecast of deficits in that market because we can't dig enough platinum out of the ground that we think we might need. And that is also then obviously driving the price. So it does definitely play a role in that, but I wouldn't say it's that the market is fundamentally broken, which I think is what people were trying to imply. It's more that, there's tightness in the market. There are challenges in the market in terms of supply, and demand is outstripping that. But look, everything comes at a price, doesn't it? There's platinum in all sorts of forms, in catalytic converters and in platinum jewelry that people will sell back or scrap at the right price. It may just be then there's a delay in turning it from that platinum ring or whatever into a product that somebody else wants, like a coin. It obviously takes time to manufacture.
Last question for you, Stuart. Do you see return customers returning to add to what they have? And do you also see where the new customer seems to be a rising trend?
Yeah, absolutely. We are at record numbers in terms of customers trading through our website. Obviously, we don't see who's buying from our partners like Silver Bullion. We don't know who your customers are, for example, or how many there are, and neither should we. But yeah, we definitely do see lots of customers returning. And there's lots of different reasons people buy precious metals, right? So some of them will buy because they've inherited some money, or they've sold a company, for example. So that might be just one lump sum that they've come into that they want to put into precious metals as a bit of a safe haven, or because it's the return potential is pretty good on it. So they might not necessarily come back time after time because they don't inherit money every day. But we're definitely seeing a bit of a change in behaviour. Again, a bit more like what we tend to see in Asia, where UK buyers are buying more regularly than they were previously. And they might be buying little and often as opposed to lots and often, just because that's how people earn. But we're definitely seeing a kind of pattern of regular savings. And you can buy gold products from us from as little as £25. So again, that's slithers of large gold bars that you're buying for that price. But we see increasing numbers of customers doing that every month.
Stuart O'Reilly, I want to thank you for your market insights from the Royal Mint. Can you tell people how they can follow you or maybe get more valuable info and insights?
Yeah, so the best way is always going to be on social media. So on Facebook, on Instagram, on TikTok are probably the best channels to follow us. We have an email newsletter as well, which you can sign up to on our website. And every week we'll publish new articles with what's going on in the market right now.
All right, Stuart O'Reilly, I want to thank you for your time, and I look forward to another Royal Mint Market Insights chat.
Absolutely. Pleasure talking to you.
That was Stuart O'Reilly sharing market insights from the Royal Mint. To learn more about the Royal Mint and their products, head on over to www.royalmint.com. If you like this video, please do subscribe and share. All are greatly appreciated. Audio-only versions of this interview can be found on iTunes and Spotify.